Welcome to Technical Tuesday. This is Fed Razak, Senior Trading Strategist here at CMTrading. And today, we're going to continue our technical analysis. But before we start, you know the drill. Make sure to like and subscribe and share, especially if you find value in this presentation. So we've done a decent job, I'd like to say, okay, of going through the entire foundation of technical analysis. We spoke about what it is, what its premises is based on. We spoke about the foundation of all the parts to it, including trends, trend lines, range bound, okay, whether we're upwards trending or downwards trending, whatever the particular situation we're at, we've probably covered almost every aspect of it in terms of giving you the mechanics of technical analysis, okay? So trends is one of them. Now, volume is another one. How many participants are actually trading in the financial markets? And we've also mentioned if there's increasing volume and there's increasing trend, then that's more validity to the trend, right? And that is just another aspect to it. And lastly, we spoke about patterns, things that continuously you see them over and over time again, and you're able to anticipate future price movements based on historic data, okay? That's all technical trading is based on, right? These are the founding blocks of actual technical trading when we're looking at the chart. Now, the question that arises, is it for short-term or is it for long-term trading? Which one is it applicable for? Is technical analysis only used for long-term traders or short-term traders? That's the question. So the answer is both, but, okay, there are a few caveats to it. Okay, now long-term trading is defined as anything beyond, I would say, 3 months and on, okay? And short-term trading is, I would say, anything between that and maybe 2 months or 3 months, okay, depending on what you're looking at. And then there's mid-term trading, okay, if you want to call it that, between, somewhere in the middle of that. But long-term trading is generally spoken of keeping a position for a longer period of time, right? And we're looking for a quarter or above. And short-term positions could be anywhere from a second or a millisecond, okay, to being up to a week, 2 weeks, whatever you consider to be a short-term trade. So what is technical analysis used for? It's used for both. But like I said, there are a few caveats to it. Number one, okay, and these are things to keep in mind and keep as pointers when you're looking to trade the financial markets. Now, if you're a short-term trader, you for sure, every single time before you do and look at the short-term trades or at the short-term charts, reference the long-term charts and then go back into the short-term charts, okay? Your trades are going to be off the short-term charts, but they're got to start from giving you a storyline of how we got to where we are. Now, those of you who have followed my target to trade, I almost always go into a weekly or a monthly chart, and then I reference something as a daily or maybe a 4-hour chart, depending on whatever I'm looking at. But it always has to start with you giving yourself a historic value to what is happening in the markets in the past. There is a caveat to that. Now, we all know that the price of $1, the purchasing power of $1 today is not what it was 20 or 40 years ago, right? There's something called inflation. Now, inflation pretty much states that the value of something has decreased, right? The actual intrinsic value has decreased, but the price has gone up. And that the markets are prone to that as well. So right now, if we're on the Dow Jones at about 35,000 and on the NASDAQ we're about 15,000, just have to adjust it for where we are financially, right? To where we are maybe 20 years ago or 40 years ago even, and to give us some perspective, okay? So although on the actual charts we don't take into consideration inflation, but it's something to be aware about, right? So if we're looking at a chart and we're seeing a support level, that is, to the persons looking at it, very significant. Now, the second thing is long-term charts are not used as entry or exit signals. They're not, okay? I'm repeating that. And the reason is quite simply because if you're looking at a weekly or a monthly chart, right, the variance of that position that you're trying to get into is so small, but in essence, it could be quite wide, right? You might not have the best entry when looking at a monthly and a weekly chart. So reference back to a short-term chart so that you could analyze for yourself from a perspective, maybe if I hold off by a half hour, 2 hours to get that better fill, okay? Sometimes it's significant, okay? And this is really an important factor when you're looking at short-term versus long-term charts. Lastly, and this is also very important, technical analysis is validated that much more. Whatever analysis you're looking at, okay, is validated more over time. So if a support line is tested over and over again over a multi-time frame, okay, multi-year, multi-month, it's much more validated than if I'm testing a support line in a 1 minute to a 5 minute chart, right? Makes total sense. It makes complete sense that something that is longer term, technical analysis is much more validated than in short-term analysis. So when we do see things, okay, especially in long-term trades that we're looking to enter the markets, and we see a certain threshold that is being tested in a longer time frame, that becomes much more significant. And that is why you have to reference both the short-term and the long-term in terms of looking at both, and it's all there for you. Because if you're only looking at the short term, you're only getting the first couple of chapters of a book. And if you're not looking at the long term, it's like you're in chapter 7 and you're picking up there. You've got to go through chapter 1 through 7 in order to catch yourself up to where you are now. And those are probably the easiest references or the easiest examples I could give to why it's so important to both go to the long term and the short term charts, and then, and only then, decide to make an entry decision. Thank you for joining me for Technical Tuesdays. We'll see you here next week.